Happy Friday, everyone. Welcome to another episode of Cafecito with Mr. Miami Real Estate. Today we're here again with Julian Manes, and we're going to be talking about property insurance, but for investors this time around. So in case you have not checked it out, be sure to go and look. We did one a couple weeks back for home buyers, specifically first-time home buyers as well, that we definitely recommend. But if you're an investor, this is the episode for you. So let's get right into it, and I guess this is the important question.
Yep.
Is it mandatory?
Yes, so it depends on the situation when it comes to how they're purchasing the property. So if you're buying it cash, which some investors do, it is optional. I do recommend it just because, you're buying this property, you're probably either going to flip it or have a tenant in it. You want to make sure that if anything happens, especially here in Florida, hurricane come tomorrow, you want to make sure you're covered, and if anything happens to that property, you definitely want to make sure you can file a claim and, get your money back and, be covered.
Right. Perfect. Yeah. So let's get into what is the builder's risk.
Yeah. So builder's risk, most of the time when investors come and they're purchasing property, sometimes they like to fix it and flip it or do major renovations. In those circumstances, we do have to go with a builder's risk policy. It basically covers the structure and it covers liability as well. Right. So let's say you have some people working in the property, maybe somebody falls or slips or something. With your builder's risk, you're going to be covered as well. But yeah, builder's risk, if you're flipping the property, usually not that expensive either. Usually around you can either do a 6-month or a 12-month, depending how long the renovations are. 6 months usually around, I want to say 15 to 18 max, and then for 12 months, you're probably looking around $2,000 to $23,000 at most.
Perfect.
But yeah, builder's risk, again, if you're flipping that property, definitely have that policy in place just for liability purposes. And also, I actually had this client, for example, where he was purchasing a property and he was flipping it, and we got him a builder's risk policy, and 5 days later, the house actually burned down.
Wow.
And he actually bought it cash, so it was optional for him. But because he had that policy, he was able to file a claim, and they're able to rebuild the property, from the ground up. But still, definitely recommend it. And again, things like that can happen here at any time. So
right.
Definitely.
Absolutely. So yeah, if you guys don't know, I've done a few fix and flips myself. It's something that I always have the builder's risk because that's what our private money lender requires. Yep. But man, thankfully our house has never burnt down. Yeah. But you never know.
Exactly.
It's something that
you
can
never
happen
know if
anytime.
somebody leaves a stove open on, or
Yeah, even doing electrical work.
Exactly.
Wow, that's
exactly.
crazy. So let's keep going. Is coverage different for investors compared to homeowners?
So yeah, coverage is different. For homeowners, you're generally looking at an HO3 policy, which is like your traditional policy. Mm-hmm. For investors, you're looking at a DP1 versus a DP3.
Okay.
Now, a DP1 is the more economically friendly policy. It's going to be less when it comes to the premium annually, right. But when it comes to coverage, there's no ordinance and law coverage, meaning that, let's say you have to put in a new roof. Mm-hmm. When you put in a new roof, you have to go ahead and comply to the county codes.
Right.
So ordinance or law coverage basically provides extra funding for that, for building it back up to code. If you don't have that coverage, it's going to be more money out of your pocket. And, no investor really wants to put that much money into a new property they just bought. Also, when it comes to plumbing, if the pipe bursts, especially if it's an old property, you might have to redo the plumbing. And with the DP1, you're actually not covered for the plumbing. And then for the DP3, that's more for if you're an investor and maybe you have a tenant in the property. It's going to cover the roof, it's going to cover the plumbing, and you can also add coverage for any personal property that the owner has. So let's say maybe they have some couches, sofas, TVs in there that they
like
just
a furnished unit.
Exactly.
Right.
They can add that coverage to the DP3. It is going to be more expensive, but it's better for the owner in the long run, just in case you never know, maybe the tenant messes something up. Maybe, again, a hurricane comes, you're going to be covered with that DP3.
I mean, I think it's always a matter of, it's not so much if it happens, but when it happens.
Of course. That's what I tell my clients all the time. It's not if you're going to file a claim, it's when you're going to file a claim.
Absolutely.
Yeah.
So, is there any coverage for investors who are landlords, and I know you just kind of mentioned it, and rent the properties? But this is especially important, especially right now in 2020. So many people have gone through this.
Yeah.
So they're landlords, they rent properties, but they cannot collect the rent for one reason or another.
Yeah. So that's a very good question. Basically, on again your DP1 and DP3 policies, you have a coverage called loss of use, which is also called loss of rents. So obviously it depends on the situation, but let's say for some reason the tenant cannot live in the property. For example, it's getting tented for termites. That's a pretty common thing here. And the tenant cannot pay the rent, then the owner or the landlord can then file a claim, and they can get, depending on how much coverage they have, they can get, paid for that loss of rent.
Perfect.
Yeah.
Okay. Nice. So let me ask you, and this is continuing with the landlords when they rent it out. Should landlords be encouraging and recommending for their tenants to get renters insurance?
Yeah, that's a great question. So I personally would recommend, if I was a landlord myself, I would recommend my tenant to go ahead and get renters insurance, just because it's not really that big of an expense annually. Usually range about $200 to $300 annually. So, and plus you're pretty much covering the tenant's personal property.
Right.
And let's say the tenant's personal property gets damaged, then it can become, you start butting heads with the landlord, say, this happened to my stuff, I need you to fix it. But then they can easily say, look, you should have gotten your renter's policy should have covered that. Right. And again, the renters only covers the personal property. And personal property, that's if, let's say, you get the house, you flip it upside down, everything that falls, that's considered personal property.
Got it. Yeah. Perfect. So, I mean, just to put it out there, because we haven't actually talked about it, is that something that you do as well?
Yeah, I do renter's policy. So, again, if you're a tenant and you want to look into it, definitely contact me and we can definitely talk about it.
Perfect.
But yeah, I can go over all the coverages, explain, just pretty much go through everything with them.
Perfect.
Yeah.
So, man, I might have missed it on the intro, but since this is dedicated for investors, I will go back for a second in case you didn't watch the homeowners policy video. Julian is actually one of the top 10
Thank you.
Florida insurance agents and one of the top producers for Goosehead here in Miami. So, man, you're killing it, and
thank you, man.
Definitely contact him for insurance, but let's keep going. So, this is very common, and even myself as an investor from time to time, we purchase under LLCs.
Yeah.
So, is there anything that occurs differently when investors are buying under corporations, LLCs, and etc.?
Yeah, that's a great question. So, actually, there's companies that even won't let you write if it's under an LLC. So first you gotta find the right company. Then usually when it's under an LLC, you have to buy a separate liability policy. So if it's under an LLC, you get, again, going back on the DP1, DP3, you can get one of those, and then that's pretty much going to cover you for the structure, personal property if you add it. But when it comes to liability, you do have to get a personal liability policy, and that's separate. Usually runs you around $300 to $500 annually, so not that big of an expense, and you can be covered up to $500,000 or $1 million in liability. So it's a great policy to have, and if it's under an LLC, it is going to be required.
And what kind of liability exactly are we talking about there?
Let's say the tenant has some family or friends over, and maybe they're having a party, whatever, and somebody falls and slips, and they get injured and they have to go to the hospital. Then the landlord, they can, if the person that got injured, they want to go ahead and take legal action, then the landlord can go ahead and file a claim under his liability policy, and he'll be covered for also liability and also medical payments as well for any hospital bills or anything like that.
Got it. Perfect.
Yeah.
Well, thank you so much, man. That was very informative. Thank you, everybody, for tuning in.
Yeah.
If there was anything that was not answered, you still have questions, drop it in the comment section, and either him or myself will get to your questions. And I also just want to say, since this was dedicated to investors, make sure that when you're buying the property, you account in your numbers for the insurance that you're going to be getting.
Yes.
It's something that's highly recommended. You never know, a lot of things happens in South Florida day to day. So again, if you have any questions, let us know, and be sure to subscribe.